Klein. I'm a partner and venture capitalist at Bloomberg. Good afternoon, everybody. Just to get a sense of the audience, how many people in the room are students? Oh, so a good percentage. How many are entrepreneurs? Oh, nice to see. And how many are venture capitalists? Okay. Oh, so I might have something that could be insightful or helpful to some of you. How many also want to be venture capitalists? Okay, handful of folks. Well, whether you're an entrepreneur or interested in potentially being a venture capitalist, I have a couple of tips on venture capital, and I'm excited to share it with you today. So to begin with, I figured just as an outline of today, we'll talk about who I am, what venture capital is, and then how do you get a job in venture capital. So to begin with, real quick snapshot. I'm a partner at Bloomberg. I actually got my start as an entrepreneur. My sister, who's in the room, and I had to figure out a way to pay for our college and business school educations. And so as a result, we started a business that did quite well. And we've learned firsthand about what it's like to be an entrepreneur. It was a really good stepping stone and foundation for my next job, which was working with Mike Wilkins, doing his education in media investing, helping a lot of companies get off the ground. And then from there, I went to join a company called Sept, which is a big telecommunication provider in Asia. I helped them with their U.S. operations and led the team that reviewed all new investments. When I joined Sept, they had something like 300 companies spread across the globe in 13 different funds, and the market had just crashed. This was back around the time of 2000. So I also got a lot of firsthand experience of working really closely with the entrepreneurs and helping them figure out what to do, because they weren't going to be able to get access to capital. And that's also actually the time when you need your venture capitalists the most. And then from there, I joined Bloomberg about 2.5 years ago. I was leading a team, heading the team called New Initiatives, which was bringing startups to work with our company and doing a blend of business and corporate development. We really do consider ourselves to be entrepreneurs at Bloomberg. I mean, many of you might have seen what the mayor's been doing. Well, that spirit that he has about supporting entrepreneurs is something that's felt very, very strongly within the company. And so recently we launched a venture fund about 6 months ago, and I'm heading up the East Coast for us, looking at various opportunities. And then Code Academy, for anybody interested in learning how to code, we're excited about them as a prospect. And then Moodle is something I would actually advocate that you sign up for if you haven't heard about it. It's a great way to keep track of what your friends are doing, and not just from mainstream press when they get reference. And then prior to that, as you can see, active content and media investor, Buddy, Associated Content, Huffington Post, BuzzFeed, Dumplay, and many more. And then with Mike, I had the pleasure of working with Leapfrog, K-12, and Productivity Point. So anyway, a range of companies. Enough about me. Let's get on to what is venture capital. So at its basic form, venture capital is an opportunity where somebody provides financing to a startup. And usually there's advice and resources that come along with it. We like to think of ourselves as more than just money. It's interesting, though, there are very few success stories when you look at the numbers. A lot of companies get funded each year, 4,000 or so. And of those, only 200 go on to successful exits. And even fewer produce 95% of the value. So it's really become something where a couple of types of opportunities produce the extraordinary gains. And the funny thing is, a lot of the companies that everyone thinks are hot end up not being the winners. They just perform, decently. What I've been seeing related to venture capital and the funding of startups is an evolution. What's early in the game was a man by the name of Bill Draper. He was essentially a man in the suit. He went to go work for his dad's venture capital firm, which is noted as one of the first venture capital firms. He didn't have much operating experience, he just kind of went into it. It was great at it. Then along came John Doerr. He worked at Intel, had some real operating experience, and then went on to help, build Klein Perkins. Now what we're seeing is someone like Mark Andreessen, who many of you might know started Netscape and now currently heads Andreessen Horowitz. They have a more different model where it actually reminds me a little bit of what SoftBank used to do back when I worked with them, is they give companies money, but they also set up a shared set of services. So they might help with recruiting, they might help with press, they might also help with some designers, bringing them to look at your product and test it out. So we think, though, that from what Mark's done and the great folks at Andreessen Horowitz and also the folks at SoftBank previously, what's evolving in venture capital is more of a model around building stuff and really working with the companies and the entrepreneurs side by side to help start companies. So we're in Homebrew, which is the man at the top, Satya Patel. He was a former product developer at Twitter, and he partnered with Hunter Walk, who ran YouTube's product. And they set up a fund where they work to help build companies as well as invest in them. Over here in the middle is John Bortwick. He's in New York. He tends to focus on a lot of media and content opportunities. He's also a builder. You come to his office, they're starting companies such that they acquired Dig, they sold a company to Twitter. They're pretty active in trying to build things from scratch as well as invest. And that's kind of how we fashioned Bloomberg Beta. It's a blend of building things as well as working really closely with the entrepreneurs to help them with the ideas that they have. And I think that's what, at least we're in the spectrum of really rewarding people who can bring more than just the money. So, quick snapshot on Bloomberg Beta. This is our infomercial. We're a $75 million fund. We're investing in areas of interest for Bloomberg, and we're looking for financial return. The exciting thing is that we have really a great heritage and culture of entrepreneurialism, and I have some wonderful colleagues based in New York and San Francisco. And so far, we've been off to the races. We've invested in 17 companies. Some of you might have heard of big companies making investments. We try to think of ourselves as not corporate venture, and the reason behind that is it really has to be something where we're working with the entrepreneurs to help them, not necessarily scouting out opportunities, particularly for Bloomberg. We also think venture is a local business, like we need to be close to the entrepreneur to help them. So we've decided to stay focused on the markets of being able to take a day trip and work with the entrepreneur instead of having to go global. And we actually aren't doing financial services just because we don't want to overlap with Bloomberg's customers. So some of the things that we like and that other VCs might like if you're thinking of starting a business, we really like technical teams. We like people who are trustworthy, have unique market insights. That's not going to necessarily sound too different, but we do want to try and change the world. So if you have a worthwhile problem, I think that's a great way of presenting things. We're also very happy to go early. A lot of venture capitalists need to see that you have tremendous traction. We'd be okay if you came to us with a plan and a team, and even if we could help you build that team. So some of the areas that we focus on and that we see as interesting in the world of trends in venture capital are networks and communities, which is something that I kind of describe as professional communities, like how do people work, how can we help make work better? New organizational models. So one thing that's happening in the world of technology right now is there's a lot of processes that have come up that can actually apply to business. So, as an example, we see the way innovations in software have come about as something that's applicable to helping build and differentiate businesses. Human-computer interaction, that's really just a fancy way of saying hardware. So, sorry about that one. Media distribution and content discovery. So, helping find content in a more seamless way. I mentioned Newsel. What Newsel does is they figure out your LinkedIn and your Facebook friends, and anytime they're mentioned in mainstream media, they send you a weekly or daily, if you want, email update so you can kind of stay apprised as to the events happening in your friends' lives. Technology platforms, kind of self-explanatory, but for anybody close to technology, I think there's an evolution of wanting to see a platform or something really of substance and invest in. And then, of course, given Bloomberg's heritage, we love data. So I figured I'd give you an example of one of the companies I've worked with previously, just to give a little bit of insight into how these things kind of come about. So at my last job when I was at SoftBank, and I led the team that reviewed all new investments, I also was actually out working really hard to think about what kind of trends were important and also meet talented entrepreneurs. And one of the things that was coming about was Facebook was starting to merge. I was out of school, so I wasn't fortunate enough to be able to have an email access to be able to get access to Facebook, but I kept hearing about it. And then they finally opened it up to the broader public, and that was quite exciting. I tried to invest in Facebook directly, but they already had their venture capitalists, and they were moving quite quickly. So I said to myself, wow, this is really neat. There's something special going on here. I had the privilege of meeting some of the early people at Facebook, and I said, I want to find a way to capitalize on the growth that I see that this amazing social platform has. So I kept my ears open and asked people, hey, are you using Facebook? What else are you using? And there's a company called Buddy Media that kept coming up. One of the guys who formed Zynga, the predecessor to it was a poker app. And so I was talking to Mark Pincus, and I said, Mark, what do you like? I'm in New York. What kind of things are you seeing? And he mentioned, there's this company called Acebox, which was something that Buddy had acquired. And so it just kept converging. I reached out to Mike Lazaro, who's the founder, and I said, hey, I want to come have a coffee with you and hear more about what you're building. And was immediately impressed. Just a fantastic, really down-to-earth, thoughtful entrepreneur. And the other thing that was fascinating about it is he was working with his wife. Now, most VCs will say they will never invest in family teams. They're laden with a whole set of challenges. And so that was one of the things that I kind of had to make sure I spent time with his wife, Cass, who's his co-founder, who was exceptional in her own right. And, I saw that this was one of those exceptional teams, and I said to myself, okay, this is something I like. I went back to my partnership. Most people kind of saw a little bit of the red flag. We got already in the husband-wife team. They weren't necessarily convinced about what they were. It was an app developer at the time. It wasn't necessarily such a scalable platform, but I really thought the entrepreneur and both of them were exceptional. The people that they were starting to attract were super talented. So I was ultimately able to get my partnership across the finish line, and we put some money into the company. Well, it wasn't a direct path. It wasn't one of those where it just went right up, even though I'm sure history will recreate itself. It was one of those where we put in some money. They were doing well, but they needed a little bit more money. So we had a discussion, and actually I think it was a relatively painless one because we developed a great working relationship with them. I had been introducing them to potential customers, working on their business plan, really felt that I was part of the inner circle and a trusted resource for them. So when it came time to them needing more money, I realized that, look, the business is still on track, it just needs a little more time. So we put in more money into the company. It wasn't it was at the same valuation as we had originally invested. So we thought that was fair to the company, and they were quite excited by that. And then all of a sudden things started to come together. I put them in touch with WPP, which is a large advertising agency. WPP got excited about the business, decided they were going to start piloting it. I'd also put them in touch with a company called MediaLink, which has extensive resources in the media area. They started in making great introductions to customers for them. I had also worked with them to get them placement at some of the top conferences. Well, this was an outstanding team. They'd show up, they had a great story that resonated, people really wanted to understand Facebook, and they started getting real traction amongst the customers. Well, certainly fun time from there. Everything was growing. They were taking some risks, doing some innovative things, and we were fortunate. Last year, Salesforce acquired the company for over $700 million. Really credited to the team, fantastic team. But wanted to make sure I hit home that it wasn't just a straight rocket ship, and even though we were fortunate enough to get in at the ground floor, it doesn't always necessarily go that way. But when it does, it's really awesome. Okay, so all this said, how many people in the room have started a company? Okay, that's good. Well, one of the things we'd love to see, if you do want to get into venture capital, is that you started a company. I mean, I showed you the evolution of how we're moving more toward operators. There's something to be said when you're sitting in a board meeting, or when you're just having coffee one-on-one with the person who's heading marketing, or the person who's the chief technology officer of the company, when you can actually understand what they've been through. And starting a company, that's what helps get you there. So I highly recommend, if there is an opportunity for you to, if you do like this entrepreneurial startup ecosystem, one of the best ways to get a job in venture capital is to be an entrepreneur at the starting point. So I will give you some strategies that I think will work to help you get a job in venture capital if you're one of the people who wants to. I did feel it was my obligation to give a little bit of a reality check. Less than 1% of the companies that come to us, we end up investing in. Well, an even smaller percentage of people who apply for jobs at venture capital, most of the teams are a handful of people, and so there really aren't a whole lot of roles. And then I tend to think the operator-turned venture capitalist is one of the more prevalent paths, but there really is no path. Mike Moritz, who's one of the partners at Sequoia, he's always been a classic analyst. He never, had worked at a company. So don't be deterred. It's something that so far hasn't scared you away. Keep after it and be hopeful. So, okay. What are the ways we increase our odds of getting a job at venture capital if you'd like to? Well, building something certainly helps. And in this environment, it's really a lot easier to build things than it was when my sister and I were starting a business. It's applications. I mean, everyone has their mobile phones out or their tablets. Certainly there's these platforms now where you can develop applications pretty easily and then get distribution with no capital required or almost no capital required. Anybody can set up a web page, right? There's ways of starting something, and I think having that insight of trying to think through how to build a product is really helpful. I also suggest that you kind of know what's going on in the technology arena, right? It's important to be on top of trends. I mean, I was fortunate. My sister started a hedge fund after our adventures in business, so she's always had a good sense of markets, and I think I've learned a lot from her. And so as a result, I've kind of tried to keep pace with different things that I see are emerging. And there's so many resources now with blogging and with some of the media bringing their content online. So I'll show a page at the end that has a bunch of the things that are kind of daily reads for me. And I highly advocate that you kind of keep up with what's going on. I also recommend that you experiment with technology. Like, I love it when somebody comes in to see us, when they're applying for a job or just looking for our capital, and they talk about the different things that they're using. So you have to be a little bit of a tinkerer, somebody who experiments in order to really like the job that we're currently in. I'd also suggest that you be part of the community. Now, that sounds common, but there's there's a lot of organizations out there now, meetups that have really great specific vertical interest areas, and hackathons. I was listening to something earlier today where somebody who was a venture capitalist found an idea because he spent all night at a hackathon. If you have any technical, proclivity, or if you're just really fascinated about startups, there are these community events where you can find like-minded people. And I look at it, going back to being like a trusted resource for entrepreneurs. If you can come to the table with, okay, I know people in the design community, so if any of our portfolio companies need a designer, a web designer, I'm going to be able to hook you up. Or one of the hottest and most challenging things, most coveted roles, but it's very challenging for us to find are talented engineers. For those of you that are students, don't only hang out with the finance folks, hang out with the engineers. If you can come to the table and say, okay, for any company, I can help your hiring needs, especially when it comes to technical talent, that's really a true differentiator. I'd also say, it goes back to kind of knowing yourself, knowing what you like. I call it developing your special skill. I try to think about an entrepreneur can take money from a range of sources. There's now something we also invested in that was announced recently, AngelList. So people can post, products and try and raise, and Kickstarter and Indiegogo. So there's a lot of fundraising platforms that are out there. And I think it's really important that venture capitalists figure out what's unique about them, and so that they can really help companies in addition to providing money. And if you want to join the team of venture capitalists, then you're part of that equation. And so going back to what's your special skill, thinking about what is something you can bring to help these different companies and these founders when they're in trouble. What are some of the unique resources that you have at your disposal? And I actually think being a student is a fantastic thing because you have such a great network of people that are eager to join startups, which is the lifeblood of the companies. Okay, so gave some suggestions. Now, how do you supercharge this? How do you hack the process? So I think one of the things that makes somebody unique when they come in to interview for a venture capital role is putting yourself in the other person's shoes. So what do you think they need to hire? What would you hire if you were in the role of trying to hire them? If you were trying to start a business, how do you become the trusted advisor to who would you want as your trusted advisor and try and be that person? So my sister and I were talking, and it was we thought it would be an interesting way to end my talk. And just say, find your why. Figure out what you do special. Figure out why you like doing working with startups. I think that will come through and resonate when you go meet with the companies or when you go meet with the venture capitalists. And feel free to ask me any questions. I'm going to put up my resources page just so you have some ideas on some of the things I read each day, as well as some of the places I've seen that I think are great opportunities to either be part of the community or develop some skills that will be helpful as a venture capitalist or an entrepreneur. Thanks. Does anybody have any questions? Okay, in the back. Bold. We like it.
Thank you. Hi, my name is Daniel from Baruch College. Last semester I actually was very privileged to interview for a venture capital fund in Connecticut. And a big part of it was the realization of the rise of crowdfunding platforms. How would you these crowdfunding platforms change venture capital?
So I think they're a fantastic innovation. I'm really excited about it because it pains me that only less than 1% of the companies that come to us get money. I think that we need to change that. And the more opportunities to back early stage companies and help them get off the ground, well, I'd love to see there be more than 20 winners a year, right? And so I think more people coming into entrepreneurship, getting access to the capital is another thing. I'd love to see it happen even more extensively if it was all possible. I think the investor, as you know, since you spent the summer there, things don't always win. VCs have a relatively low hit ratio on things, but when it wins, hopefully it really is a home run. So I think anybody who's thinking about using a crowd or investing in companies via crowdsourcing platforms just has to understand that you really should take a portfolio approach to things, or try and have some unique insight into the things that you're investing in. Like I found when I was coming out of school, I started putting money in public companies that my friends were going to, because I thought it was a really good sign. I knew people that I thought were talented at school, and when I saw where they were going to work, I said, okay, they must have done their diligence, so there's probably an opportunity at that company. So I think that's one of the edges I would look to see if you're backing anything on those platforms. I just want to make sure I'm not encouraging everyone to go to Vegas. Yes.
My name is Peter from University, and as currently about to start my own big work/company as well as that's really awesome. And my question is, I don't intend to make money with my company, at least in the short run. It's kind of more build up a personal portfolio. How do I capital for that for a company that is not intended to make money directly?
So most companies don't make money for a while, right? I think it's rare. I think that the main thing is just to make sure you have enough runway, that you raise enough capital so that you can demonstrate you're on the path to proving that something really there with your business. I'd say of the 17 companies in our portfolio, 2 are profitable. So I think entrepreneurs have to take a risk appetite that they're willing to, invest and not necessarily make money, put the money instead toward marketing. But it's very important to set up the milestones with your, investors so that they understand you're on track and that you're ultimately heading towards something that would be profitable.
What is the time frame that you expect if it hits what time?
So there's no, so I put up there, I said something like, where our fund is 5 years. We have a longer time horizon than anyone else. It doesn't matter. We're focused on financial return, but we only have one LP, so one investor in our fund. So we have a little bit more runway. The typical fund is looking to get returns within 5 to 10 years. That's like the life of their fund. Usually you're not getting the investment the day one they invest in their fund. They raise their fund. So the timing of when, I'd say probably 3 to 5 years is usually a good proxy as to when you need to show there's going to be traction. But it doesn't necessarily need to be that you're profitable. It just needs, because there's a lot of companies right now, if you look at like some of the e-commerce businesses, they could be profitable, but they're investing a lot of their money in acquiring customers. So if they weren't trying to grow with those customers, they would be profitable. The only other caveat on that one is investors don't just want to throw money into something that's you need to show that you're getting towards acquiring profitable customers or building something that's getting to a profitable model, even if it doesn't have to be day one or even year 5. I don't think Twitter is profitable. I'm not sure. So there's a lot of companies out there. Yeah, that is. I'm worried about that as well. Just make sure you have the story pretty crisp as to how you're going to get to the path of building value. Yes.
Hi, my name is Scott Strenger. I run operations at Nickel TV. We're a media technology startup.
I'm friends with some of your investors.
Great. Yeah, we have wonderful investors actually. So my question for you is, you mentioned that you want to take Bloomberg beta to be more shared resources, but a little bit more than that. I found that a lot of VCs work with the entrepreneurs and the founders at a very high level, but actually work with people more down the organization. I'm curious if you could talk about how your partners discuss how you help the other people besides just the top level entrepreneurs.
Yeah, it's interesting. I learned a lot at SoftBank when I was sent to build world companies to help them figure out. What I often found was, okay, the C-suite can be really exceptional, but the people who are doing a lot of the real work are the people who are below that. And there's a lot of stars that are kind of up and coming. So I think it's hard as one person to get to truly build an organization, but what I do is I try to go to a lot of the company events that they have, even if it's just to hang out and get to talk to different people at different parts of the organization, to say. It's not something I think we can do necessarily so formally, but it's something that we're certainly very cognizant of and trying to do. And also making sure, though, that we work with a management team that's open to that, open to having, investment relationship with your investors.
Yeah, I'll give a personal anecdote. I happen to be fortunate enough to be very involved in the community here in New York, and I know several other individuals who are in the same exact role as me, which is managing operations at totally different companies, not all media, not all tech, and I can tell you that just getting coffee with them and talking about the different challenges we face, we find that there are different resources that we didn't even know of, and just having an open conversation in the New York startup community has led to things that help me improve my operations at my company, and also their operations too. So there is something happening more generically, just going to these community events like you mentioned in your conversation, but we can also get more resources and there's more direct conversations happening, more introductions being made at different levels.
Yeah, and I'm like, come see me after. I'd love to hook you up with some of our startups. I think that's fantastic. And that's one of the things, like, personally, we're seeing that development of some of the companies are trying to have, like, director of community within companies, within their funds to work with their people in their portfolios to help them.
It makes a huge difference.
Yeah, and one of the things I'm setting up for our fund is a shared resources page for all our entrepreneurs. And so, like, who are the best accounting firms? Who are the best web hosting firms? Like, it's just setting up that kind of resource so that our entrepreneurs can, kind of collaborate. But it seems like what I love is you've done that in the real world. Like, if you've taken it out to, that, and that's fantastic. Congratulations, that's really good. And I'm happy to put in touch with your investors. Okay, I got one more question. Who wants to be the last one? Okay.
At what point in the development of most startups work, do startups become their founders versus their income and their living? And what are they typically doing?
Sure, what happens, it's funny, one of the things that we have a visceral reaction to that kind of in the negative is when somebody comes to us and they say, oh, I'm part-time on my startup. We kind of want to see that you're all in on this. If you don't have enough conviction that this startup is going to work, then it's terrifying for us to, you know the business much better than we do. So we want to see day one that you come to pitch us that this is your full-time focus. Start being an entrepreneur is such a full-time job. It's so hard to have employees that you've got to, make sure they're happy and healthy and dealing with their career advancement. You meanwhile got to make sure you have enough cash to make the payroll for those employees. Challenges of dealing with customers and making sure the product is exactly what they want. And I just don't know how anybody can do that without 100% of their focus. It's often said, we try to help our entrepreneurs have work-life balance because, being an entrepreneur is so time-consuming. So I just don't even know. We expect that their whole source of income is going to be, coming from the startup. And we're hopeful that everyone's interests are aligned so that when the entrepreneur is wildly successful, we're going to be, successful as well. And we're not going to be getting money before they do. We really want to see that all as a partnership as it should be. And one of the things I feel really privileged of doing this for a while, and so a lot of the people I've worked with before have done well, and then they come back and, they're hooked. They just like starting businesses. So they come back to us and say, hey, I'm on to my next startup. Will you back me? I often like to see if they made money last time they're putting up a little bit of money this time. So, we're in it again together, but, always happy to work with them even if they're, multi-millionaires or something like that. So anyway, thanks. It was fun speaking with you.